But where is 14? Here, chapter 14 is not here in them.
I will check. Chapter 14 is not there. Chapter 15 we have not covered actually. That is the reason chapter 14. I will see what is the chapter. Even I am searching chapter 14. I don't know where it has been saved. I will check and I will get back to it. Okay? No problem. I'm here. Inshallah khair. Now, see the things. What happens? Just a recap, okay? Just a recap. What we have done? We have done steps 5, okay? First, group structure, NCI, net assets, goodwill, NCI, and retained earnings, okay? We have done revaluation, impairment, all the things we have, post acquisition profits. The same thing will continue, okay? The same thing. Now there is another. In the previous case, we have what we have done. We have done in terms of receivables, in terms of payables. Is it right? We have done. In payables we have decreased receivables. In receivables we have decreased payables. Okay. Intercompany transaction. Now what happens when you are having intergroup trading? There is something. You see what happens. You have sold. Okay. Parent company is sold to subsidiary. Is that parent company has sold to subsidiary? Parent company is sold to subsidiary worth of 10,000 goods inventory. Now, in this inventory, they have sold. Is it right? By that time, at the time of acquisition, assume they have sold how much? They have sold worth of 800. This has been sold, and how much is the balance? Balance is 2000. Is that balance is 2000? See, this is not sold. Okay, if it is not sold, you should not take the profit on that. Whichever amount, whichever value has been sold, on that value, profit has to be considered. Whichever is not sold, what they say, they use the word portion. Is it right? Portion of unrealized profit. Okay, portion of unrealized profit. We use the word portion of unrealized profit, PURP, or we use the word portion of unrealized profit, PUP. Is it PUP? They will mention very clearly that this much amount of goods has not been sold, and this is the margin we are going to calculate. If we are going to say that this much amount of goods not sold, then 20% margin. We have to reduce the 20% margin. The same thing how you are doing in the impairment, the same thing how you are doing in the revaluation, the same process we will follow. Only thing what we are adding is, we are adding the inventory here. Okay, we are focusing on inventory. Okay, what is there? When one group sells goods to another, a number of adjustments may be needed. Current accounts must be cancelled. Is that we have seen that? Is that where goods are still held by the entity, any unrealized profit must be cancelled. Must be. Okay, they say must means by any means. Inventory must be included at cost. Is that we should not miss? You should not, when say it is a parent and subsidiary, we have to take only the cost element. Okay, we should not take anything profit. We have to, because in future the parent company will sell by including what? By including the profit. So only if it has been sold earlier, we have to eliminate, we have to deduct the profit element. That is what it says. Is it right? Just read once this one. Once it is over, tell me. Any doubt, tell me. Is it okay?
So we will need to remove the profit.
Yes, exactly. Said we have to remove the profit. That's nothing is nothing. If there is a difficulty, I'm here to tell you. Okay, I'm here to tell you that this is the difficult thing. You have to be very clear on that.
Okay, now it's clear.
Fine.
Yes, it is clear, sir.
Yes. We will see. Is that how we are doing? We will see what is the value of inventory. You see what is the margin, profit margin. Make the adjustment. If it is selling by the parent, then we will take into consideration. Definitely, it will affect the retained earnings. In the retained earnings, we have deducted finance cost now. In the same way, we will reduce the profit also. Is it right? In the same way, we will reduce the profit also. Fine. Adjustment entries, debit the retained earnings, credit the group. We will do the reverse. If that is sell by the seller of the subsidiary, we are doing in where we will do the adjustments where we are doing the adjustment in NCI. If the seller is subsidiary, this is the only thing we have to do. If it is by the subsidiary, we have to do in the NCI. If it is the parent, we have to do in the retained earnings. Okay. Next. What they say? Health holding company. Usually they say holding and subsidiary company. Okay. Holding H means the holding company. Holding company. Okay. Holding company bought how much shares? They bought 60% of the shares. Is it right? They bought how much? 90% of the shares. Okay. 90% of the shares of the equity yes limited 2 years ago. First group structure. Is that group structure? H and S. Is it right? 2 years ago. Is it right? This is 90%. This is 10%. Is it? When they have ago on when it has been happened on 1/1/2002. This is the first step. Automatically it has to be done like this. Okay. Next, when they have given retained earnings are 5,000, retained earnings are 5,000. Statement of financial position. They gave non-current assets, property, investment, cost. Is that inventory? Fine. All these things. You see the thing. Safety transferred goods to health at a transfer price of how much? 18,000. What is the markup? Profit margin is 50%. Two-thirds of these goods remain in inventory unsold at the year end. Okay, 2/4 is remain unearned. Okay, the payables or receivables in health stood at 22,000 on that day. Goodwill has suffered an impairment of 10,000. Health used the fair value method to fair value, okay, method to calculate NCI. The fair value of NCI is how much? 4,000. Prepare the statement of financial position. Is that? Prepare the statement of financial position. Is that? Now, first we have done group structure. Next, what you have to do? Next, what you have to do? Step 2 is what?
Net assets.
Net assets. At acquisition, at reporting date, at reporting date, is it right? Post acquisition profits. Is it post acquisition profits? Okay, how much is there? Just you take down the thing. Share capital. Is it share capital? Share capital will remain same more or less. Okay, we have this experience. Now you can say share capital of subsidiary is 5, only subsidiary. Okay, it is nothing is there. You have the retained earnings. How much is the retained earnings? First paragraph. How much is the retained earnings? 5,000. Is it right? This is in thousands. Okay, this is in thousands. Okay, this is in thousand. How much is the retained earnings? Retained earnings is 5 at acquisition. Reporting date, retained earnings are how much?
31.
31. Difference is how much? 26. Okay, difference is how much? 26. Now, here what we have to do, we have to say, they say that there is something is and been sales, is it right? They have sales was there. How much is there? Sales. There is, we will from here, what we will do? We will deduct what? We will deduct portion of unrealized profit. Is that portion of unrealized profit? Is that better to write down? Is that here I am putting here, okay? Here only I will put it in box, okay? PUP. Is that how much they have sold? How much they have sold? Go to the thing. Their transfer price is how much? Price is how much?
18.
Transfer price, is it right? Transfer price times how much is the markup? Markup margin.
50%.
Markup margin, is it right? Divided by, it is that total cost is nothing but markup margin plus cost. Okay, markup margin plus 100%. Cost is 100%. Markup plus cost. Okay, markup plus cost. Now, how much they have unsold inventory? Is it right? Unsold inventory. Transfer price is how much? 18,000. Okay. Markup is how much? 50%. Markup plus factor is how much? 50 plus 100. Markup means 100 plus 50. Okay. 100 plus 50. Okay. Times. Unsold inventory is how much? They have sold. There is unsold inventory of how much? Two-thirds. Is it right? Again read. Read this one carefully, slowly.
2/3.
Okay. Transfer price, markup margin divided by markup means we want to know how much is the unrealized profit. How much we'll get? It is 18. Okay, I have written 18,000. I have written 18,000. It is in thousands. Okay, in thousands. In thousands. 18. Okay, how much we'll get? 18 times 50 divided by 150 times 2 times 3. It comes to how much? 4.
Yes, 4.
Is it? This is the unrealized profit reporting. When it has been happened, see that it happens on when? It happens on the reporting. It happened on the reporting date. Is it right? It happens on the after the transactions, after acquisition. Is it right? After acquisition. It is unrealized. Unrealized profit you have to deduct. Unrealized profit you have to, post acquisition you have to deduct. This is the first time we are doing. Inshallah, next time you are doing, you will get more clarity on that. Okay? Next time. That's all is there. Share capital is there, retained earnings is there. We don't have anything else. Do the total. 10, 36 minus 4, 32. 10 plus 32, it comes to
22.
22. This is the first time I am doing. Just give me time, okay? Just give me time. Next time you are doing, I will make you perfect. Okay? I will make you perfect on this. Okay? Is it? This is step 2. Step 3 is what?
Goodwill.
Goodwill. Investment is how much? Investment, you take the balance sheet. Investment of parent, how much? Investment of
34.
parent is how much? 34. Is it right? Next. NCI at acquisition is how much?
32.
No.
It's acquisition 10.
How much NCI is at acquisition?
10.
4. NCI is at
At
acquisition
acquisition.
is how much?
It was 10.
4, 4, 4.
Mm.
We will deduct 10 later. Okay? We will deduct 10 later. We will not deduct now. Okay? First, this is the investment of the parent. This is the investment of the subsidiary. Investment of the parent plus investment of the subsidiary. It comes to how much? Now, from here, we will take what? We will take the net assets. Okay, net assets of NCI. Is it right? Net assets of NCI at acquisition. Is it right? Net assets of acquired acquisition working 2. How much will take? Minus 10. Is it clear?
Yes, 28.
Is it right? Net, the same process we are following. We are not doing anything else. No difference. Goodwill at acquisition. There is a impairment
We
is there.
have to
Is it right? There is a
10,000.
impairment. How much is the impairment? Impairment is
10.
10. 18. Is it right? Impairment is 10. It is 18. This is the good. We have to show in statement of financial position. Is it okay?
No, it's okay.
Now, step 3.
Step 4. 4, sir.
Sorry. Step 4. Is that NCI? Is it NCI? NCI at acquisition. How much? NCI value, fair value of NCI at acquisition. Is it NCI fair value at acquisition given in the question? How much?
4.
4. Okay, in thousands. Okay. Next, what you have to do here? Next, what we have to add or what we have to deduct?
The post acquisition. Shall we add it?
No shall, we have to add it. Is it right? Post acquisition profits. Share of, okay? Share of post acquisition profits. How much is the post acquisition profits? 22. It is there 22. What is the percentage? 10%. Is it 2.2? Is it right? Next, what you have to do?
The impairment of
Good.
NCI.
Share of impairment. Okay. Share of impairment of goodwill. How much goodwill has been impaired? 10. Is it right? 10 into 10%. Is it 10 into 10%? How much? 1. How much you will get? 6.2, 5.2. Check.
5.
Okay. Next.
Yes.
Step 5. Is it right? Step 5. Retain earnings. Is it right? Step 5. Retain earnings. How much is the parent? Parent is 159. Okay, this is in thousands. Okay, add post acquisition profits 22 times 90%. It comes to how much? 19.8 minus impairment.
80%.
Is it right? 10 into 90%. 9.
9.
How much? 159. 19.8 minus 9.
9. 9.
169 point. 169.8.
0.8.
Okay. Next, what we have to do? We have to do consolidated. Okay. We have to do consolidated. Consolidated statement of financial position as on 31st December 2003. First, what you have to write?
Non-current assets.
Non-current asset. Assets. You write assets, okay? First, you should write goodwill. Working 3. How much is there? 18.
18.
Next. What are the things? Property and plant and equipment. How much is there? 100 plus 30. Is it? Property, plant and equipment. 100 plus 30. 130.
130.
Okay, nothing is there. Now you understand. Alhamdulillah. I can say that you now you got a complete picture about this. Okay. Only thing is you have to be Alhamdulillah. Is it yes or no?
Yes.
Is it current assets? Inventory. Is it right? Inventory. How much is the inventory?
90 plus 20.
Pardon? How much is there?
90 plus
20. Now here you have to be little
but
bit
you will
careful.
minus the 4.
90
You will
plus
minus 4.
90 plus 20 minus 4. Okay, now 110 minus 106. Okay, 106. in the receivables also. Okay, in the receivables also 110 plus 25. Is it receivables? Receivables 110 plus 25. How much is the intergroup?
Receivables.
Yeah. How much is the intergroup receivables? Intergroup is how much?
22,000.
How?
The payable and receivable.
How?
22 on the day. 22.
How much is there?
This number. Yes.
22,000. Okay. 22,000 minus 22. How much will get? 110 plus 25 minus 22. 113. Is it right?
Yes.
Next. What is the next? Bank. 10 plus 5.
Actually,
Is it right?
50.
Bank how much? 10 plus 5. Total it comes to 18 plus 130 plus 106 plus 113 plus 15.
3.
Okay. Equity.
Equity.
How much is the equity? Only parent 15. Okay. Parent how much? 15. Retained earnings are how much?
We calculated.
Yeah. Working 5.
116. Yeah, 169.8.
Next. NCI. Working 4. 5.2.
5.2.
Okay. Non-current liability. Non-current liabilities are there? Yes. Non-current. 120 plus 28. Is it right? 120 plus 28. 148.
148.
Current liabilities. Again same thing. Minus 22. Okay. Now you understanding?
Yes.
Okay.
50 plus
50 plus 16. Now you will understand.
minus
Okay.
22.
50 plus 16 minus 22. 66 minus 22, 44. Total.
Yes, something. 382.
I can give you an assurance. You take any question paper. I have downloaded the mock exam also. Okay, I have downloaded the mock exam also. I will send you the mock exam with answers. Okay, with answers. You can do it very easily. Subject to statement. Once we done income in the income statement is more easy. Income statement is more easy. Income statement, profit and loss account is much easier than this. Are you okay?
Yes, okay.
Okay. Next, unrealized. What they say in this we have done in terms of inventory. Non-current assets also same process. If one group sell non-current assets to another, adjustments must be based to create the situation that exists. There would have been no profit on sale. Depreciation would have been based on the original cost of the asset. Okay, which means we have to take something with respect to it. Just read this one.
Okay.
Okay.
Mm.
They gave the illustration. Okay, they gave the illustration. I will do the test your understanding. Okay, I will do the test your understanding. See, this is the test your understanding. Okay, after that you will have now, you will test your understanding 7 and test your understanding 8. Test your understanding 8 is multiple choice questions. Okay, test your understanding 8 is multiple choice question. Test your understanding 7 I will
When
do.
is your
Pardon?
mid-year acquisition? Test your understanding 7 for mid-year acquisition for different concepts, not non-current assets.
Yeah. Is it right? Can we finish it off this one?
Okay.
Okay. I know you are tired, even I am tired, but Alhamdulillah we will do. Okay. Just work it out. Alhamdulillah, the best part is we are not in the Ramadan place. Okay, that's very important. Fine. Now, what they are saying, same thing. This is the last question you are doing. You should be have a very perfection on this. Perfection. Okay, only non-current assets will say. Inventory includes 8,000. Every other point which we have done from the beginning till the last concept, we are covering here. Every other point, a comprehensive examination model. Comprehensive examination model. Okay. In the examination, they will give little bit less, but here they are covering everything. They are talking in terms of the inventory cost plus 25%. Cost plus means 100 plus 25. 25 divided by 125. On June 1st, they are transferred a plan for 15,000. Carrying amount is 10,000. Useful life is how much? 5 years. What they said? What they said in the here in the condition they said that in the condition there are depreciation would have been based on the original cost of the asset. Okay, original cost of the asset. Fine. Next. That's the second. Next, NCI they gave you. They already gave the NCI fair value. Now you know at the date of acquisition, 40% of NCI, the fair value of NCI is 50,000. They gave you the impairment loss, goodwill. Okay, they gave a Susan earn a profit of 9,000 in the year. We will see. The loan note books represents money borrowed from car 30th November. We will see. Included on cars receivables 4,000 related to inventory sold during the year. Susan raised a check of 2,500 sent to Carl on November 29. Carl didn't receive this check until 4th of December. Okay, we'll see. What they are asking us? They are asking us to prepare the consolidate form. Now, if you have stop clock, now next we will do that. Okay, we'll put the stopwatch and we will see within how much time we are doing. Okay, step 1, group structure.
I can do it now. I have that one, that clock.
Okay, do it now, no problem.
The timer.
Timer, yes.
Yes. Yes. Okay.
I will be little bit
Now
fast. Okay, I will be little bit fast. Anything is there, you stop me. Okay, fine. Group structure. How much they have bought? They bought 60%. On 1st May, the summarized financial statements, two entities. 30th November, they gave 30th, 1st May, the 1st May, the 1st May. See the thing. They are for how many months? 1st May, May, June, July, August, September, October, November. How many months are there? 7 months. This is mid-year acquisition. Is it right? This is mid-year acquisition. How much is the car? Okay, Carl and the Susan, is it right? And Susan, how much is there? Is it? This is Carl is 70%. Susan is 60%. Susan is 40%. Susan is 40%. For how many months? It is not. It is for. They have said it is 1st May. Okay, 1st May 2007 means it is for how many months? It is for 7 months. Is it? It is for 7 months. Very important. Fine. Next. Next. What is there? You have to step 2. Step 2. Net assets. Net assets of subsidiary. Okay. Net assets. At acquisition, at reporting date, is it? At reporting date, post acquisition profits.
This position.
Post acquisition profits. Is it right? How much is the share capital? Share capital is how much? Share capital is 40,000. Share capital will remain same. Now we are doing the last of the last question.
Okay, 40,000.
40,000. Okay. Next, retained earnings are how much? Retained earnings are how much? Retained earnings at acquisition is how much? The summary retained earnings is how much? Retained earnings is reporting date. Retained earnings is 69,000. Okay, reporting date retained earnings is 69,000. At acquisition, retained earnings are how much? At acquisition, retained earnings are how much?
At acquisition.
Huh.
The
At
emission.
acquisition, retained earnings are how much? Very interesting. Very interesting. See the thing. How much they have earned profit? They earn profit of how much?
9,000.
9,000. Is it right? They earn
Yes.
profit at 9,000. This 9,000, is it right? It is for 1 year. It is right? It is for 1 year. 1 year. Okay, 1 year. And we have to take for how many months?
7 months.
7 months. Okay, how much it will come? 9,000. 9,000 into 7 divided by 12. Is it right?
5,250.
How much? 9,000 times 7 divided by 12. 5,250. Is it right?
Yes.
5,250. Fine. This is the profits for now. Now, what is the acquisition profits? Acquisition profits is 69,000 minus 5,250. Because 69,000 is what? 69,000 is the complete year profits. Is that 69,000 is the complete year profit? It includes profit of the 7 months also. It includes the profit of 7 months also. That is the reason we are taking the profits of only at acquisition. Definitely we have to exclude it. 69,000 minus 5250. How much is there? 63,750. Is it okay?
Yes, okay.
Next, how much is the difference? Increase 69,000 minus 63,750. Same thing. How much is there? 5,250. This is the post acquisition profits. Is it right? This is the post acquisition profits. Next. Next. What is there? What is there? You have the what is there? You have something is there, is it right? Relating what? Unrealized profit. Okay, unrealized
Yes.
profit.
Yes.
How much is the unrealized profit?
Unrealized profit.
Is it right? Unrealized profit. Okay, unrealized profit. See the things. Is it right? Unrealized profit. I'm writing like here.
Yes.
8,000 times 25 by 125. Is it right? 25 divided by 125. It comes to how much? 1 by 5. 1 by 5 means 1600. Is it right? It comes to how much? 1600. Now you write. Very
It
simple.
will come to
Per
1,600.
portion of unrealized profit inventory. Portion of unrealized profit.
Yes.
Is it right? Portion of unrealized profit inventory. 8,000 times 25 by 125. It comes to 1600. Okay? It comes to
Yes.
1600. Next, portion of unrealized
Yeah.
profit with respect to non-current assets also. Okay?
Mm.
They have said an
Yes.
item of plant
Yeah.
has been sold
Yeah.
15,000. Is it right?
15,000.
See, they have given
Yes.
a statement here, structure here. Is it right? Here they have given, see that thing.
Yes.
With transfer, depreciation, without transfer, portion of unrealized profit. We are using the same
Currently,
format. Okay? We are using the
depreciation.
same
So
format.
we will deduct the depreciation, then we will.
Yes, yes.
Okay.
Okay? Is it right? With transfer, with transfer, without transfer, portion, it is the portion of unrealized profit. Now, what is the with the transfer carrying amount? Carrying amount, carrying amount
15,000.
with transfer is how much? With transfer is 15,000. Without transfer is how much? We have to take
10,000. The
10,000.
carrying amount is 10,000. The remaining useful 5 years the
Is it
useful
right?
life.
Next.
We will deduct depreciation.
Yes. Is it right? Depreciation. Okay. What they are saying, depreciation is for 5 years. Okay. Depreciation is for 5 years. Means 15,000 divided by 5. Okay. 15,000 divided by 5. When they have done this, they have done this on June 1st. Okay. June 1st. June, July, August, September, October, November. Okay. This is for from June to November. How many months? 6 months. Is it right? June to November. How many months? 6 months. Now, how we have to take? We have to take 15,000 times 1 by 5 into 6 by 12. Okay? Into 6 by 12. How much you will get? Is it right? Into 6 by 2. How much you will get? 1,500. Okay, 1,500. In the same case, okay, 10,000, 10,000, 1 by 5 into 6 by 12. It comes to how much? 1,000. Is it right? It comes to how much? 1,000. Unrealized profit is how much? 500.
500.
Okay, little bit careful. Okay, we 13,500, 9,000, 4,500. Okay, 4,500. Is it right? 4,005. There are two things are there
Yes.
here. We have something related to inventory and we have something related to depreciation. Okay, this is we have to deduct it. Is it right? From here we have to
Yeah.
deduct it. Is it right? Now, portion of unrealized profit. Okay, portion of unrealized profit. Okay, inventory. Is it inventory? How much is there at reporting date? 1600. 1600. Portion of unrealized profit with respect to plant. Okay, with respect to plant. How much is there?
500.
With respect to plant. Now, what we have to do with respect to plant? See the things.
Yes.
What we have to do with respect to plant? How much depreciation? We have increased the depreciation or decreased the depreciation? Depreciation is excess or depreciation is less?
Of what? Less of what?
See, if we have sold it, is it right? If we have sold it, the depreciation is 1500. It is only a transfer. Okay, it is only a transfer. When it is only a transfer, the value is less. Is it right? The value is 10,000. We are calculating depreciation not on 15,000. We are calculating depreciation of how much? We are calculating depreciation of 10,000. Means this 500, is it right? This 500 is what? This is the depreciation saved. This is the excess depreciation. It is a transfer from one company to another company. From one company to another company there is a transfer. The rule says that we have to consider the cost. Is it right? We have to consider the cost. We should not consider the sale value. When we have to consider the cost, what happening? We are calculating depreciation on a lesser amount. Okay, we are calculating depreciation on a lesser amount. When you are calculating depreciation on the lesser amount, what will happen? Depreciation expenses will decrease. Depreciation expenses will decrease, profits will increase. Is it right? Profits will increase. This is what it says. In inventory profits will decrease, whereas in non-current assets the profits will increase. Why profits are increasing? Because in non-current assets we have to take on the basis of cost. If it is taken on the basis of cost, the value will be less, the depreciation will be less, the depreciation expenses will decrease, and the profits will increase. Okay? Is it okay?
Yes, okay.
First time you are doing, first time you are working is means the depreciation expenses are decreasing, the profits will, what will happen? The post acquisition profits will increase. Okay, share capital, retained earnings, unrealized inventory, unrealized profits, plant unrealized profits. How much is there? $40 plus 63 750. 103 750. We will do the next time we are doing this, we will have more clarity on that. Okay, now we are doing inventory, we are doing the second question, we have clarity. Next we are doing plan, we will have more clarity. Okay, 40 plus 69 minus 16 plus 500. 107 900. 5250 minus 16 plus 500. 4,150.
4,150.
Okay. Next. Working 3. Goodwill. Investment is how much? Investment is how much?
They paid 76.
Investments is how much?
76.
76. They paid
Gave me
76,000 in cash. Okay. Something is there. Okay. Something is there. They have taken loan. Something we will see that. Okay. Invest. NCI is how much? NCI in the question. Okay. Given in question. I will write given in question. How much is there? NCI. Point number. Point
50,000.
number 3.
40%.
How much? 50,000. Is it? NCI is how much? 50,000. Okay. It comes to how much? 612. Okay. NCI at acquisition. Working 2. How much is there? 103,750. Okay, 103,750. 126 minus 103,750. How much will get? 22,250. Is it right? This is goodwill at acquisition. What is there next? There is a impairment is there. Point number 4. How much is impairment?
1,000.
1,000 minus impairment 1,000 21,250. Say 21,250.
Statement of fund.
Statement of financial position. Working 4. NCI.
At acquisition.
NCI at acquisition.
50,000.
How much? Is it right?
50,000.
How much is the NCI at acquisition? NCI value. Sorry.
50,000.
Yeah, NCI value. Fair value. NCI fair value. Is it right? How much is there? 50,000. 50,000. Add share of post acquisition. Is it? Share of post acquisition.
4,150.
How much is there? 4,150 times 40%.
40%.
4,150 times 40%. How much? 1,660 less
1,660.
NCI share
Impairment.
of
Share.
impairment.
1,000 into 40%. 400.
1,000 into 40%. 400. How much? 51,000.
51,260.
Is it right? Next. Working 5. Retain earnings.
Company retained earnings.
How much is the parent one?
189. 189.
Parent is how much? 189. Okay.
Yes.
Parent is 189. Next. Next.
We already the portion.
Is it right? Share of post acquisition. Is it a share of post acquisition? How much? 4150
Into
60%.
60%. 2000.
2490. Okay. Minus share of impairment
600.
1000 into 60. 1000 into 60.
600.
600. Now, who is selling machinery to whom? Who is selling machinery to whom? Carl transferred an item of plant to Sawson for 15,000. Is it right?
So the parent company.
Carrying amount is how much? 10,000. Means carrying amount is how much? 10,000. Fine. Because of this, how much is incurring loss? Incurring loss is how much? Incurring loss by parent. How much Carl is incurring loss? 15,000 minus
20.
10,000. Is it right? This is the loss actually. If we have sold to other party, he would have got 5,000 profit. But he is selling to the subsidiary and it is reverting back. The profit margin will decrease. Okay? The profit margin will decrease. This profit margin should be deducted from the retained earnings. Is it? Portion of unrealized profit on plant. I will write not sold to uh, not sold to others. How much? 15,000 minus 10,000. If he has sold to others, he would have got 5,000 profit. He has not sold, he has transferred to subsidiary, he will get loss. That loss we have to deduct. Depreciation, it is we have saved expenses. Okay, depreciation we have saved expenses. But what a transfer we have incurred. The difference is if we have sold to others, it will be a profit. Now we have not sold to others. Because of that reason, there is a loss. Okay, that loss has to be deducted. Is it clear to you?
Yes, clear.
No. It's not clear now?
Yes, clear.
Fine. How much is there? 189
9 plus 250.
189 plus 249.
185.
185.
890.
This is the retail earnings. Okay. Now little bit more challenging. Okay, little bit more specific. Okay, This is completely different from what wherever consolidated statement of financial position as on when 30th November 2007. Slowly, it's a little bit different. So new things are coming. We have to be little bit slow on that. Okay. Next. Fine. How much is the assets?
Current assets.
Is it a goodwill?
Goodwill.
Goodwill. How much is the goodwill? 21250. Is
Yes.
it 21250? Is it at 10,000 divided by 5? Okay, fine. Goodwill. How much is the goodwill? Property, plant and equipment. Very simple. Little bit slow. How much is there? 138, 115. Okay. 138, 115. Okay. Minus. How much is the portion of see, this we have taken where? This we have taken in retained earnings. Okay. This we have taken in retained earnings. This we have taken in where? This we have taken in where we have taken that 500. 500 where we have taken? We have taken in net assets. Is it right? This is retained earnings working 5. This is net assets working 2. Okay. This we have to take where? We have to take in the statement of financial position. How much we have to reduce it? See, 5,000 is the profit. We have reduced how much? We have not calculated depreciation. Reduce the depreciation to the extent of 500. The net loss is how much? The net loss is 4,500. This we are going to show in the statement of financial position. Again, I will repeat. 5,000 is the loss because they have not sold to others. 500 is the 5,000 is the total loss. 500 is the depreciation. We have reduced the depreciation. Total 5,000 is the loss. In this 500 we have saved. Mean the net loss is going to be how much? Net loss is going to be how much? Net loss is going to be 4,500, which we have to show in where? In statement of financial position. 4,500. I will put one line here. Okay, I put one line here so that you understand. I know, but just I am putting it for your understanding. Is it? See, 5,000 is the overall loss. We have saved 500 depreciation. The net loss is how much? 4,500. 138 plus 115 minus 4,500. How much it will come? 248,500. Is it okay with you?
Yes.
Okay. Next. How much? See, how much is the investments? Investment. See, we have done this. If you remember, we have done in somewhere in test your understanding 3 or 4. Okay. Total investments are how much? 98,000. How much we have paid? 76,000. Is it right? How much you have paid in cash? 76,000. Now what they are saying, The loan notes, is it that the loan notes? How much is the loan notes? Loan notes are 20,000. Okay, loan notes are 20,000. What they are saying, the loan notes in certain books represents money borrowed from card. You have borrowed it, is it right? See, I will put like this. You will get confused if I write like this. Okay, investments. 1 minute. Okay? Given, is it right? Given how much? 90. How much? 98,000. Okay, 98,000 minus cash paid. How much? 76,000 minus loan. Is that loan? See, you are taking the loan also. Is it right? You are taking the loan. How much you are taking the loan of the subsidiary? 20,000. Is it 98,000 is the investment, 76,000 we have paid cash. We have taken the loan is how much? We have taken the how much we'll get? The investments will be 2,000. Is it clear?
Yes, right.
Next, current assets. That current assets. How much is the inventory is there? Again, inventory you have unrealized profit is there. Okay, inventory. How much is the inventory? 15,000, 17,000. Okay, 15,000 plus 17,000 minus unrealized profit is there. How much is the unrealized profit? 1,600. 32 minus 1,600. How much it will come? 3,400. Receivables. Receivables are how much? 19 plus 20. Was it 19 plus 20? 19 plus 20. How much? 39. Okay, 19 plus 20. Now, you see the things. You see point number 6. Okay, you see point included in Carl's receivables is 4,000 relating to inventory sold during the year. They have raised a check of 2,500 and sent point number 7. Point number 7. They have checked is how much? 2,500. But they have not received the check. Is it right? They have not. We have done this in the previous case. We have reduced it from where? We have reduced it from the we have reduced it from where? We have reduced it from the receivables, cash in transit, and we have added to cash. You remember that?
Yes.
Yeah, we have deducted from the receivables. And next, there is something 1,500. 4,000 is there. 4,000 minus 2,000. Next, what is there? Intergroup. Okay, intragroup. Intragroup is how much? Here we are deducting from receivables 1,500. From payables also we deduct 1,500. Okay, is that? From the receivables we will deduct 1,500. From the payables also we deduct 1,500. How much we will get? Only this one. 39 minus 4,000. 35,000. Cash we will add. Okay, cash we will add. How much is the cash is there? Cash is there 2,000. There is no cash here, only 2,000. Is it right? Means cash 2,000 2000s plus 0, 2000s. I will write separately. Cash in transit. How much? 2500. Total 4500. How much you will get the total of this? 21 250, 21 250, 248 500, 2000, 3400, 35,000, 4500.
341.
341 650
650.
total assets. This is a complete problem. ACCA is very clear. They will not give anything which is not given. Okay? They will not give anything which is not given. Every chapter last problem you do. Every chapter last one before multiple choice questions you do. It will cover all the. This is the secret of ACCA. We have to work on those things. It will make things. Okay? Next, to equity and liabilities. Is it right? Equity and liabilities. How much is there? Share capital. Share capital is 50,000. Only parent. Okay. Share capital is how much? 50,000. Only parent we will take. Retain earnings. We have done working 5. How much is there? 185 890. 185 890. Is it NCI working 4? Is it NCI working 4? How much is there? 51 260. 51 260. Total is how much? 50 185 890 51 260 287 150. This is the total equity. Now, non-current liabilities. There is a 8% loan. Is it right? How much is the loan?
Yes.
0, see, 0, 0 plus 20,000. It is how much? 20,000. In this, what happens? They have made the investment. Is that cost of investment? How much is there? Which is one there? Which note? Note number 4. Sorry, note number 7. Is it right? Note 7. How much? 20,000. You have to write this, okay? They will give you marks when you put 0. Understand this? For this, they will give you 1 mark. Trust me, they will give 1 mark for this. You should not say that why I have to write. No, you have. For 0 also they will give marks. Is it right? For 0 also they will give marks. Current liabilities. Current liabilities. How much is there? Current liabilities 3323. 33 plus 23. How much? 56. You have intra-group. Is it right? We have intra-group. We have deducted from receivables also. How much we have deducted receivables? 1500. Okay. 56 means 53, 54, 500. Okay. How much is the total?
500 plus 287 150. 341 650.
341 650. Is it clear?
Yes, clear.